Does it mean that tech stocks are still firmly the place to be in this bull market? Let's ask Doug Clinton, Intelligent Alpha founder and CEO. It's good to see you.
You too.
As I said, I mean, it was sort of right there in front of your face as to why there's so much excitement about what's happening here. Is that how we should take it, as a reminder to stay here as an investor?
I think it is a reminder. And we've got all this stuff on X. If you spend 2 minutes on X looking at anybody with a finance account, it feels like everybody wants to call the top. Valuations are frothy. They see these deals where NVIDIA is investing in ostensibly one of their biggest customers. And they say, we've seen this playbook before. This happened in the dot-com era. It has to be over. I think that's the wrong perspective, though. I think it is a reminder that this is the biggest infrastructure build ever. And these companies like NVIDIA, like OpenAI, they're dealing with such big dollar numbers. It doesn't move the needle if they invest in some small company. NVIDIA needs to play big. The only way they can play big with a model builder is to invest in OpenAI.
But I feel like, as an investor, we all need to take a tremendous leap of faith, maybe in ways that we haven't had to take in 25 years, when we're assuming that these big numbers are legit, that the return on the big numbers is going to happen, and we have to put all our faith in a kind of market where we're used to putting our faith for a 6 to 9 month time frame, right? We make bets ahead on what's going to happen in the future in the stock market.
Yeah.
Now we're talking about having to do that in years. Is that right? You feel that way?
I think that's right, and it is uncomfortable. I won't say it's not uncomfortable. I think it's even uncomfortable for me as someone who's spent my life in tech. But I think we kind of see the writing on the wall, and I've said this before. I think that this AI spend boom, it will culminate in a bubble bigger than the dot-com era. I don't think we're there yet. I think we still have 2 to 4 more years. We've talked about that before here on this show. I still think that's the right time span to think about how aggressive these numbers are going to get. And on top of that, you look at what the mega cap companies are doing. That is one thing that's different in this era versus the dot-com era, is that the biggest companies in the world they're all in. They're spending hundreds of billions of dollars of free cash flow they're generating on these infrastructure builds. So I think that's the thing that's different, where they're going to continue to put this money to work, and I think it might last longer than people think.
What about the less profitable to no profitable names that have surged a lot in the last few months? That make you nervous, cautious? Is it much ado about nothing? What do you think?
They make me even more nervous, and I'll tell you what we've done at Intelligent Alpha. We use AI to do our stock picking, and our models, I think, have actually sort of noticed this and reflected this. Right now, most of our AI-related exposure in our flagship Livermore ETF is mostly mega caps. So we've kind of avoided a lot of these ones that might be up 100, 150%. They really don't have the backbone, the support of growing revenues to justify those valuations. I think we are kind of due for a pullback and a reset in some of those names. That does scare me. But I do think the mega cap companies can keep working despite that.
All right.